Calculating your return on your investment. How do you work it out? Basically, what is your rent? Deduct your expenses. That's your net return on investment. Simple as that. When you do that, determine your cap rate or your yield. What is it? Is it in line with market conditions at the time? Again, it's whatever the figure you get from your net return over your purchase price. So if you're turning $100,000 net income and the property is worth $2 million or asking $2 million, it's a 5% cap rate. Then a much harder exercise is to try and determine what the appreciation of the property would be in time. This could vary. No one's got a crystal ball. But again, do your homework, research the area, research the industry, research demographics, work with your commercial real estate mentor, determine what the potential is of increase over a period of time. Some industries grow faster than others. There was evidence of that with the IT industry in the past. And you've got childcare centres, which have gone up ridiculously high. You've got industrial, which have increased substantially in the last 3, 4, 5 years with COVID, etc. And the growth of online sales. On the other hand, you've got office buildings, they're feeling the pinch a bit because people are working more from home. The demand is decreasing. So these things, most of them are fairly easy to identify, but do your research. Also consider the property's long-term cash flow. Have a look at the leases. Are there increases substantially over the years? If you believe that you may have a situation, most of the leases that I've seen in the past have been 3% or CPI, or sometimes 3% plus whatever, or CPI plus something. At the moment, with the higher inflation rate, that the increases will be higher now. I would say there'll be a lot of 4 or 5%. And high interest rates aren't going to last forever. You may have a long lease, they'll increase 4 or 5%, which is fair enough at the moment. When, we don't know when, the inflation rate drops, which could only be 1 or 2 years, and then you've got a 5-year lease, and you've got 3 years after that, next 2 years, well, there's a good chance that you'll beat the inflation rate, so your growth of your rental will be higher than the prevailing inflation rate. So that's basically how you determine your potential return for your investment. Work with your commercial real estate mentor. I've got a lot of examples of this in my book, available now on Amazon. I've got the link downstairs, Commercial Real Estate Investing for the Residential Investor. Tastzidis CST Properties.